and gentlemen, welcome to another episode of the Nerd Chronicles. This is your host, proud lame, certified beta male, simmer and giant, whatever it is, no game. The socially awkward nerd, Christian Paul, speaking at your service. This following episode contains graphic content that could be uncomfortable to some viewers, that could be like disheartening, not safe for work, that type of ordeal. It could offend some viewers in some way without any intent at all. It could be strong language. It could be basically strong graphic scenes, however it may be. There will be an E that's actually placed onto the top label up on the YouTube set, and it can basically require either views for either minimum 13 up, or in some cases, depending on YouTube's policy, it could be 18 up or however it may be. Please take notice before we get on with the presentation. Alright, viewer discretion advised. Now let's get back to the feature.
This is Sam Bankman-Fried. People call him SBF. He's the founder of FTX. He also controlled a crypto hedge fund called Alameda Research, but that's all gone now. He wants you to think he's this sweet guy. He even brought in a famous YouTuber who called him the most generous man in the world. Yep, that happened. Truth is, Sam Bankman-Fried is a liar and a crook. His personal crypto FTX token was basically a Ponzi scheme hidden below layers of Moonbro jargon. He even went on Bloomberg's podcast and bragged about it. Yep, that happened. He used his Ponzi token as collateral to borrow billions of real dollars that he couldn't pay back. He then used those real dollars to build an empire out of dying companies like Voyager and BlockFi. This led Jim Cramer to call him the new JP Morgan. That's weird. It's not like Jim Cramer to promote a billionaire con artist. SBF sold people cryptos like Bitcoin, or so they thought. What they really bought from SBF was an IOU. But as long as everyone didn't cash in their IOU at the same time, the scheme worked. Until it didn't. This other a-hole who hates SBF came along and engineered a bank run with some passive-aggressive tweets. It worked. SBF didn't have enough money to repay everyone at once, and now his customers have lost everything. He'll be happy to know that this is exactly how every bank in the world operates. So where did all the money go? He misappropriated $4 billion trying to save his failing hedge fund. Whoops, that's a felony. He spent $21 million on Super Bowl commercials, $5 million for the big guy, $40 million in campaign donations. I wonder what he wanted in return. And everyone who's pointing at this story and saying,
"This is exactly why we need to regulate crypto."
Remember that SBF stole billions. That's already a crime. And he spent a lot of it on bribing politicians. Also a crime, in order to create a crypto monopoly for himself. Government regulations don't protect the customers. They protect the crooks. That's exactly what SBF was trying to do.
Juicy! Juicy. Juicy! Good evening, or shall I say good morning at the time of recording, ladies and gentlemen. Alright? Let me get my thoughts here real quick. Juicy! Welcome to another episode of the Nerd Chronicles. Alright? This is your host, proud lame, socially awkward nerd, certified super beta male simp with no game whatsoever, has no idea where he coming or where he going, who knows where he would be. Okay, odd socially awkward nerd who is naive on crypto, hint hint, Christian Paul, right? And I tell y'all, man, the lengths that a lot of people will go, even those with like the highest accolades, the best schools, you know, even those that have like the high paying jobs, you know what I'm saying? Juicy! Summa cum laude. Juicy! Doctors. Juicy! Juicy! Juicy. Juicy! Lawyers. Engineers. Businessmen, businesswomen. Okay, even your local dude from the trailer park, your local dude from the hood, whatever it may be. They're very, very desperate to overcome this inflation hurdle right now. And it's literally this income recession that is about to go nuts during this bear market, right? It is a shame to see folks even of that caliber, even certain managers that are very desperately trying to go to extreme lengths just to live that high value lifestyle. More specifically, that ultra high value lifestyle, okay? Where they get themselves pampered, alright? Get themselves their perms, their weekly blogs, their nails done, get their little pedicures and all that, you know. Have they backup makeup artists, have they backup nutritionists come through. So they can up their game and become cookie moisturizers. Cookie moisturizers! Eggplant moisturizers. Bushy moisturizers. However you want to call it.
Do you see?
You can give yourself the urge
Do you
for
see?
numerous suppressors to come awry. You already know.
Do you see?
Yes, queen. Yes, king. Get yourself moisturized. Okay.
Do you see?
You want the lifestyle. Yes, you want the yacht. Okay. You want the peace. You want to try and sleep wherever you want, whenever you want. Go as many vacations as you want to. You know, live the whole 9 yards. And you feel like investing in crypto, any form of money, any form of new coin or chain that's going to get you up to the promised land is the best way to go. But oh, no. Little do you know, this ain't the stock level where it's fully regulated and all that stuff. Has some regulations that the Americans had, all these other globes had when it comes to Interpol and all these things. Crypto is literally decentralized, literally deregulated. It has its own rules and bounds. This is when you think you know.
Do you see?
About certain coins. And you try to analyze. You try to analyze where they're going to go and where it's going to anticipate. The entire crypto market actually shake up right in front of your face. Even if you're thoroughly well analytical, even if you're really deep into STEM fields, engineering, mathematics, physics, whatever, chemistry, whatever, biology, environmental stuff, whatever it may be, earth sciences, whatever it is, okay? Even if you're well thoroughly in depth and you're advanced in those techniques and those characteristics, PhD level, master's level, however it may be, you can still come up short. It actually evolve a lot faster than you know. And it's way, way more volatile than stocks, bonds, you know, hedge funds, you know, however maybe the old traditional way of investing. Okay? In case in point, we got young, self-proclaimed whiz kid, you know. The self-proclaimed Michael Jordan of crypto. The self-proclaimed LeBron James of crypto. Some people may call him JP Morgan Chase of crypto, whatever the F it is. Your self-proclaimed savior to fully change the cryptocurrency market and try to run a big monopoly of it. Sam Bankman-Fried, SBF for short. The homeboy that literally gone way gung-ho. You know, pictures himself as the humble one. The humble son, if you will. Deemed to the public. Deemed by a fellow YouTuber that's he the most humble. Come to find out behind the scenes, he be buying out like luxury mansions, high level $14-15 million mansions up in the Bahamas. You know what I'm saying? Even though he may appear like he riding around cheap up in the States, he living lavishly over there behind the scenes, getting folks involved, You know what I mean? FTX, Alameda Research, have their little compadres that they know and other workers. Some of them they has up in the squad, even though SBF is a physics major and he graduated from undergrad with a physics degree and a minor in mathematics, right? Most of his other cohorts are a bit dumber than him. Way more naive than him about this whole space. And they're not even deep in the STEM fields, even his girlfriends. And they've been work spouse and getting it on. Boom, 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 boom. Right? Having their little fun and whatnot. You know what I'm saying? And look what it got them. Doing all this trading up in these foreign countries, trying to take advantage of all the discrepancies up in Bitcoin, globally trying to get a big hedge investment. And that's how homeboy built FTX. Come to find out, so as he's doing, making his own coins, loaning out people's money without even finding a way to pay it back, or not even have enough capital, or even have enough margin capital to pay it back. Still naive on investments, thinking that he knows everything. But all these other big time CEOs actually have big hedge funds and stock and everything. You know what I'm saying? That know a lot more than he does, and some of them make sense he's a fraud. And look where he at now, literally around November 9th. Where the stock literally plummeted, right? All the way down the wayside the moment one tweet came out by one former investor of his, straight up Binance, warning him how illegitimate some of his stock really is. And that's when people literally started panicking, literally started losing their minds, right? As if another crash is coming with another recession. Okay? Now, me personally, right? I personally do not know much about crypto. I'm still learning. Been through a couple meetups on that stuff up in the city. But I'm still naive because it's still evolving right fast in my face and I don't even know. But I do have some videos of some folks that are actually more well versed on this. And there could be some 2 parts in this. It's going to be Part 1, Part 2. Part 1 is probably going to be a very young woman that actually is deep up in the crypto space, which we will be reviewing right on SBF's ordeal and right SPS or curtail, however it may be, when it comes to ego plus hubris equals denial equals arrogance, right? And then Part 2 is going to be the Forbes article, right, which we will actually be going over up in the YouTube click and actually trying to dig frame by frame to see what the heck is going on behind the scenes. What are the hidden layers of there that got SBF up in that position here today? So, no more talk for me. Let's go and have some fun. Juicy!
We only had a few days to make some of these decisions. What we basically came to believe was the following. The first was that, if possible, it would be extremely valuable to the ecosystem to backstop some of these places. First of all, it's just backstopping customers and making sure they're protected. But second of all, stopping contagion from spreading through the ecosystem, right? Stopping it from being the case that anyone who transitively did business with any chain of people who did business with one of the troubled assets themselves became troubled. And then the secondary goal was maybe there are good trades to do. Maybe there's an investment or acquisition that can be done at, terms that we'd be excited about, given the sort of need for capital right now. But that was usually not the standard we were able to hold ourselves to. In practice, the standard was, do we feel okay about this from a financial perspective? Does this look at least mediocre? Not a huge loss in expectation, maybe a gain in expectation, hopefully, maybe not, was sort of the bar that something had to cross in order for us to feel comfortable, intervening there. And often we just weren't sure. You look at a lot of these cases, they had 4 days before they're going to file bankruptcy. And so we had 4 days to do all of the diligence we could on the company, learn everything about it, understand the industry, their business, their customers, understand how we thought things were going to unfold, and then make a judgment call and wire money. I think the Voyager case is sort of an interesting one there. What we ended up doing was extending a sort of 2-piece line of credit. And the first was $70 million. And that $70 million was money they could just draw on immediately, no strings attached. And we knew we might lose that. Then there's a larger line of credit which would eventually have potentially plugged our best guess at the time as to what the complete hole was, but which had conditions on it. If there's just an immediate run on the bank here and the business is just going belly up and there's nothing we can do to actually save this, like, we don't want to just keep ignoring through it. We very well may lose that 70 million. I don't know if we're seeing it again. And so be it. Like, we understood that risk going in.
Do you still have enough cash if you needed to do another bailout?
Yeah, we did. And we try to keep that on hand. Like, we try not to empty the coffer, so to speak. We had a couple billion going into this. And, it lines up roughly with the amount that we'd raised, over the last year. And, on top of that, we had been profitable.
So billion-ish to deploy?
Yeah, and again, you get to definitional issues here of how much do we really feel comfortable deploying? Saying that there's another ballpark billion, that is sort of, completely unencumbered, certainly will get you within a factor of two, certainly, of the right answer.
You said FTX has a responsibility to seriously consider stepping into the time to save companies. Why did you have that sense of responsibility? It's not going to be good for anyone long term. If we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything. And so, from a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and it was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
All right, ladies and gentlemen, we got part one of this FTX fiasco with the homeboy SBF. When it comes to ego plus hubris equals denial equals arrogance. Juicy, fucking juicy. Feel me? And we have this young lady here, who is hosting a currently YouTube channel by the name of Crypto Tips here. You may want to go check her out. You know what I mean? She is literally going to probably create some craziness up in the cryptocurrency space, if you know what I mean. Now, let's go on trying to dig to what this young woman has to say here when it comes to SBF.
Today, we're going to talk about why I think one of the largest and growing big names in this cryptocurrency space and representatives of this cryptocurrency space is a fake. Today, this video is my invitation to you to take the red pill of anyone who's claiming to be the savior of cryptocurrencies. That is one heck of an oxymoron, and I'm going to go into it, and you're going to understand why by the end of this video. If you guys are interested, and if you guys have been watching these videos and you haven't done so yet, I encourage you, and I appreciate it if you hit the like button and if you hit subscribe, because we're putting out videos every single day, keeping you guys up to date on what's happening in this cryptocurrency space and, our opinions of what's going on. If you guys want even more information, go ahead and check out a link for the CT Club that is available down below in the video description. And there you can get access to our personal crypto portfolio, the trades that we're doing, our insights on what is happening with the market, basically everything that we're doing with our cryptocurrencies and what we're paying attention to in this cryptocurrency space at a much more intimate level. So today's video, we're talking about Sam Bankman-Fried, the CEO of a growing popular exchange, FTX, and especially as of late, he is showing.
Ladies and gentlemen, FTX is short for Futures Exchange. Just to let you guys know. All right, let's continue watching.
Showing his true colors to those who are really paying attention to his intentions of what he wants to do with cryptocurrencies and how he is, whether we like it or not, shaping the impression of cryptocurrencies to his users and those people who are paying attention to what he's doing in this space. Sam Bankman-Fried is known for being this altruistic, morally strong and rich person who is just trying to get as rich as he can so that he can give it away to others. But not yet. Because as of late, although he is the youngest billionaire to ever exist, he has, I think, given away to charities or, charitable efforts, charitable donations, about like 0.1% of his net worth. The equivalent of, what a normal college kid would put like $15 towards a charity. So not quite there yet. He's got to make a little bit more money first. And that's what we're talking about in this video. His efforts for making more money. That is his tried and true, his number one goal. And we're going to see that similarity and all the things that he's willing to sacrifice to achieve that goal. So it's not like Sam Bankman-Fried came from nothing. He started off right out of college with a 6-figure income at a financial firm trading ETFs. So right off the bat, he was already making pretty good money. And then it wasn't until 2018 where he decided to start dabbling in the cryptocurrency space. Not hodling, not investing mentally in the fundamentals of why cryptocurrencies were invented in the first place. Which, Sam, if you're watching this and you want to learn why cryptocurrencies exist, why Satoshi Nakamoto even tried to create something that was as innovative as Bitcoin, I invite you to watch this, subscribe to this channel and watch all these videos, because that's what I'm passionate about.
Alright, so and understand, you grew the team around to actually form FTX and Alameda Capital. Basically, naive people who know nothing like myself about crypto, but yet want to try and go in and dabble up in the space and try to download as much as you can, trying to like be money hungry behind the scenes.
Wait, it was in 2018 he started investing in cryptocurrencies purely to make a profit and finding, through trading, through an arbitrage opportunity in particular that he found between the US markets and the Japanese cryptocurrency markets. He found a healthy 30% surplus, basically, that he was able to do arbitrage trading for quite some time, and that's basically how he made his billion in cryptocurrency. Within that process of him doing all these trades and trying to do it at the pretty high volume and high worth value of trades, he found some shortcomings in the cryptocurrency exchanges that he was using, and so that inspired him to create his own that we all know as FTX. So fast forward 4 years later, the year is 2022. Sam Bankman-Fried is a well-off individual in general and a powerhouse that some consider to be a powerhouse in this cryptocurrency industry if you're judging by the deep pockets that he has accrued. And we have the failings of a lot of centralized lending platforms and just centralized platforms in general. This often happens during bear markets in cryptocurrencies where...
Do you see the bear market theory, right? It's not just limited to cryptocurrencies, it's also limited to stock markets as well. There's two types of markets. You have the bear market as well as the bull market. When you deal with the bear market, you have some lows in certain stocks and cryptocurrencies, depending on how long the bear market could be. These are the ones that can literally trigger recessions as well as depressions, i.e. the Great Depression up in 1945, 1929 and 1945 around the time, as well as most notably the 2007 to 2009 Great Recession. All right.
The weak and otherwise failing projects fail, and we get a nice cleansing out of it.
We saw
the failings of Celsius, Voyager, and also the crypto investment fund Three Arrows Capital. And, just general, a huge fallout between those major players going bankrupt and the trickle-down effects. Sam Bankman-Fried saw an opportunity not to let the free market cleanse itself and actually come out all the better for it, an opportunity for him to buy out these companies, to absorb them into his own smorgasbord of cryptocurrency companies.
And that's normally what you basically try to do with stock. Normally you when someone actually buys down, you actually try to buy the stock literally for cheap immediately. When someone else's fails, you actually buy it for cheap. And hopefully you'll be able to try to make a profit in the long term. When trying to do all the trading in the short term, that's what can really bite you in the ass, even though you're not knowing it.
and an opportunity that he deemed to be a profitable investment. Fast forward, 2, 3, 4 months later, now Sam Bankman-Fried is ready to unleash institutional investors into this cryptocurrency space. He's waited long enough to see his own cryptocurrency investments start going to the moon again. This would be, his first bear market. He's impatient. And so very recently, a few days ago, in fact, Sam Bankman-Fried, or SBF, published his own ideas for how cryptocurrencies could be regulated. The U.S. is just dragging their feet just a little bit too much, don't you know? And he's ready again to pump his bags, regardless of how high of a barrier of entry it would create for regular people like you and me. No, he's in, and he's ready to see his bags pumped so that, again, he could make even more money so that he could one day give it away. But not yet, right? And again, what he published was actually ideas, not real solutions or, real logistics of how this could actually be implemented. For example,
and this is coming from a physics major that actually graduated in physics from MIT. With all these crazy theories, with some of the stuff that she had to prove that she actually really dug deep behind the scenes on. Listen to you.
He was saying how DeFi platforms should be registered. How does a decentralized code register itself? Again, it's like the U.S. Treasury and OFAC trying to sanction code. How does that work? Also, he thinks that all blockchains should be able to stop pretty much instantly in the case of a hack so that they can prevent hacks from happening, instead of allowing these blockchains to, over time, become all the more secure and robust because attack vectors are expertly targeted by hackers, and these hackers provide a very high incentive for these blockchains to be secure because the risk is that they will get hacked. But no, he thinks there should be absolute centralized control over the function of a blockchain so that they could stop it, so then a hacker can't hack it. Instead of, again, the attack vectors being identified and remedied and moving on and being all the better for it. Again, showing a lack of interest in what the free market can actually produce, much less interest in seeing this cryptocurrency space become more decentralized and robust against anything like regulations. Again, because he's all for regulations, because he believes regulations brings in institutional investors, and that might be the case. And that might make crypto, of course, appreciate in value. But how fun is it to be on the outside looking in of this new asset class because the regulations put you on that side of the fence? Not so fun, not so free. That's not what we're all about here. Now, lucky for us, Sam Bankman-Fried himself is actually an attack vector on crypto. He is not the last, he's not the first person to try to impart their own will, their own centralized entity and selfish interest in imparting their influence on the development of this cryptocurrency space. There's been a lot of people, a lot of megalomaniacs popping up in the crypto space. They all tend to fade away by the wayside and fade away into the oblivion of crypto history because it's not about the person. It's about the decentralized networks that are being built and the freedom that they grant. That is what is most important and should be held most high by the people who are learning about cryptocurrencies, investing in them, and building them. If you guys are new to this channel, welcome. I think this is a good video for you to tune in on. Thank you so much for tuning in to Crypto Tips. My name is Heidi. If you haven't done so yet, I encourage you to hit the like button and hit subscribe. We're putting out videos every day, so don't miss it. Bye, guys.
All right. Let me get back to full screen real quick. Shout out to Mrs. Heidi Chacos, by the way. All right. Very, very, very fun and interesting stuff about crypto and about homeboy that more than likely, and she actually called this out before the craziness literally went down 2 weeks later, where all of his assets, all of the company's stocks that may be literally dropped in a single day. Sam here. And I'm telling y'all, part 2 is going to be extremely, extremely juicy. Juicy! You're going to love it. Alright? So, no more talk up in here. You know? Chris and Paul from the Bob Chronicles signing out. Part 2 coming soon.